Over the last month, I have tested more than 1,000 different trading strategies in order to find the best possible one, the one which will produce me the best possible results in the foreseeable future. And in this video, I will share all the findings with you. I will tell you what is the best possible strategy to trade and how you can use it. Stick with me, I will tell you all the findings. And as I said, I was working vigorously over the last month, and the AI was working even more because as soon as I found that I can use AI to backtest my strategies, I started using it a lot. And AI was doing a lot of iteration of all the strategies, and it was researching all the market, finding opportunities in the market. And over here, you see all the type of strategies in the different domains which was testing. I was testing the strategies across the different stocks, small cap stocks, mid cap stocks, and large cap stocks, different types of industries, different types of markets, niches, then different types of financial instruments. There were stocks, there were futures, there were options, there were crypto, and there were a lot of different strategies which were tested. As you see here, hyper growth breakout, we tested only 60 different variants, and bull transition with a hedging, almost 40 different variants. Futures Bitcoins, 30 different variants. Momentum breakouts, 50 plus backtests. Mean reversion strategies, 18. Different types of future strategies, maybe around 30, 40. And the list goes on. I've been testing in order to find that perfect strategy. And the results was very interesting because some of the strategies, they were working very well, and some of them, they were not really good. And what I found, if you simply double it down on winners, then you can actually radically increase the output of the strategy. For example, let me share with you the best possible winners here. Uh, for example, there's like a phase 6 momentum strategy, which is the best possible strategy right now. It is a bit risky strategy, but it is the best strategy. And as you see, annual compound growth rate, it is 111%. And this percentage started from 10. And I've been iterating different variations in order to ramp up the numbers. And as you see, that was my very interesting finding. The more you research, the more you backtest, and the more you learn about the strategy, the more AI knows about what actually works in the market and what doesn't work, and the more it actually improves the strategy. And AI can improve as well returns as well as the drawdowns. And it does a lot of assumptions you can never imagine. So my first finding was that you need to test and see what works and what doesn't work, and then double down on winners. Second finding was that backtesting and the live testing, they are usually uncorrelated from each other. And you need to live test your strategy on the paper environment before you're gonna put it on autopilot with the real money, because backtesting, the live testing usually identifies the flaws in the strategy which were not identified during the backtesting. The flaws can be in the order executions, in the hedging, in taking the stop losses, and everywhere, all those areas, in the stock selection as well, in all those areas, they can be flaws. And those flaws, they will be only identified during the paper testing stage. So the paper testing, it is the critical stage, and you cannot skip it. And it actually takes quite a lot of time to paper test the strategy. I'd rather say minimum 2 months is needed to identify that if you have a sufficient amount of trades of your strategy, to identify if your strategy meets the targets, meets the KPIs, or it's actually offset and there's no opportunities there. And you need to spend this time. And right now I have two strategies which are running in the paper environment, and I'm gonna give you an update on those strategies in the next month or so. How does it happen? In what's right there, what's wrong, and pretty much I will share all the findings with you as well. The third finding I found is that there is no perfect strategy. All the strategies they have the good sides and bad sides, all of them. And you cannot find a strategy which is going to be working for you 24/7, 365 a days and producing you money. There is no strategies like that. There are all the strategies. They are some of the strategies they're working best in the bear market, some of them in the bull market, some of them in both markets. Some of them they have a higher return, some of them are lower returns, and all of them they have a positive sides and the negative sides. So and the last outcome, the last finding was very interesting for me, is that the best possible strategy for your portfolio is the combination of strategies. If you have a combination of good strategies which are not correlated to each other and which are produce good uncorrelated returns, then you can actually build a strategy which will be making you money for your portfolio consistently regardless of any market conditions. And that's usually the combination of multiple strategies. In my particular case, after doing all the research here, I think goodness, give me a second. I need to find it. Oh, it's somewhere at the bottom. Yeah. So the combination, like of all the strategies, are two different strategies. Like they're gonna be the core. Uh, one strategy is gonna be on one strategy's objective is gonna be to keep in the profits and do not give it away. And that's used the diversified portfolio of the different ETFs, and it actually rotates the position between them. And the only objective of that strategy is to retain the profit. And another strategy, it is going to be for generating the profit. During the bull market, when the market is pushing up and the stocks are pushing up as well, this strategy is going to be used to generating returns. So one strategy is going to be used for generating returns, while another strategy is going to be used for retaining those returns. And that's how I think the best possible strategy is going to work for me in the future. I'm going to have a combination of multiple accounts in my investment portfolio, on which account I'm going to have the certain strategy which is going to be running, and I'm going to be rebalancing my accounts on the semi-annual or annual basis in order to maintain the relation of the accounts. This is the plan for me, and as you see, after doing all the vigorous testing, I've actually identified the combination of the strategy which was making money even during the bear markets. So for example, the 30-70 split between rotator and another strategy is produced returns in 2021, 2022, 2023, 4, and 5, and 6. I do understand that the last years were actually when there was like massive IT, AI bull market, and that's why it's not really considered. But finding the strategy which was producing a good returns in the bear market, while the index fund was actually not producing any returns. That was a very good finding for me. For example, in 2022, this strategy produced 18% returns, while S&P fell minus 19. So that was a very good finding, and I think that's the most likely split between the strategies I'm going to stick with. And once again, more testing is going to be needed. But right now I'm in the paper testing. So right now I'm just one step ahead from going live. And I'm going to keep you in the loop of what's happening here. I hope you find value in this video. And I see you in the next one. Take care. Bye.